when the economy turns soft, and there's a lot of space they've gotten that they took on long-term leases and released in short-term. So it's an uncomfortable position to be in.
Before we move on to the next topic, I mean, all this capital sloshing around in the private markets right now, and the fact that rates are poised to stay even lower for even longer, do you think there's a bubble here?
I think there's an excessive amount of money in the later stage of these early private high-tech companies because funds have been formed, and we've stayed out of that area. We were in a much we're in a growth, we're in startup, seed, A round, and we go into some later stage, but not at these stratospheric levels because it's very hard to see an adequate venture type return at these prices. I don't know, to buy in at $47 billion valuation, to make 2 times your money, it's got to be $100 billion. I mean, there aren't that many.
Should they delay it? Should they delay the IPO?
If he could avoid it at this time and get his capital structure straightened out and some of the things that people, a 350-page prospectus, nobody can read, really. That's as hard as a Mueller report to read. I think that he should be, if I were he, if I had the capital available, maybe slow down a little bit, grow to fewer countries, fewer places to open, and concentrate on what I've got and building that. He's got a great base. You don't have to go, take over the world.
You're talking Adam Newman, the CEO there.
Yeah.
All right, we also wanted to ask you, Alan, about Box. CEO Aaron Levy joined us last night exclusively on Closing Bell after Jeff Smith's Starboard Value disclosed a 7.5% stake in the cloud company. Here is what Levy said.
Overall, they see an opportunity where Box's shares have been undervalued by the market, and frankly, that's what we're focused on driving, both by re-accelerating the growth rate of the company as well as driving greater profitability in the business. So we're very aligned with Starboard's interests, and we look forward to collaborating on them in this process.
Aaron Levy, CEO of Box. I mean, they too have struggled. They've been public for a few years, struggled to, I guess, put out consistent, profitable growth, and therefore the stock hasn't done much since the IPO. It's lower.
Well, it's an interesting, I could have come down here today and you could have been talking about any company and any activist fund. It just happens to be, I know a little bit about Starboard because through my money manager 4 or 5, 6 years ago, I had an investment in the hedge fund. I do not, full disclosure, have an investment today. And frankly, they were an activist in a public tech company that I knew very well. And they really provided a very constructive role. They were in for a couple of years. They changed the management around or changed the directors around. They did a lot of the right moves. Frankly, to a certain extent, I'm sorry they left. After a couple of years, they did sell their stock. So I think that I don't know Levy and I don't know Box intimately. I have reviewed the record, and it has slowed down in terms of its growth. But I think, and he, as far as I understand, he does not have a supermajority. So they've come in at 7.5%. I don't think they'll go over 10. And they will, I think Starboard, I don't know Jeff Smith. I think I've spoken to him at the time, but I haven't recently. I think they will play a constructive role, and I think he's smart in welcoming them rather than fighting.
Market agrees with you.
They do. Okay, so I have friends.
Yeah, and this gets right back at the point you just made before about dual-class share structures. I mean, Box is one of those companies where they did away with that structure. I wonder when you see a move like this, though, and certainly Levy is very well respected in Silicon Valley and seen as one of those up-and-coming, I think, kind of tech stars, at least for how outspoken he is. And broader trends in how he talks to them. Do you think that when these types of dynamics take place, more founders who are taking companies public continue to adopt this dual-class share structure?
I absolutely hope that isn't the case because I do believe in shareholder democracy. I have spoken out, and I do believe that having perhaps some control in an early-stage growth company that may be, 2, 3, 5 years old and goes public, there are things they're doing in terms of research and development and marketing that they need time because it's going to create perhaps early losses while they're developing their market. And so having a sunset provision which enables them to phase out that supermajority control, but it's got to be realistic. I mean, the last couple that have come out have had 15-year and 20-year sunset provision. That makes a kind of
a long day.
That makes a sham. It's of the whole process. But I do think that having early ability of a founder, but I think Levy's taking an approach. He doesn't have supermajority control, but he's being open and saying, I'm willing to listen and let's talk.
See, we got it back to dual class structure. That was your favorite topic. Alan, thank you for joining us. Alan Patricoff.
And still to come, an exclusive with the CEO of DocuSign. Following that company's Q2 results, the stock is up big. We're back in just a moment.
At CDW, we get you want to be ready for...
At Tesco, we can pop our pasta in your Astra, our Red Leicester in your Fiesta, or our mayo in your Mondeo. All you need to do is try Click and Collect. Just go to Tesco.com, order your shopping, then click and collect. With the minimum basket spend now only £25. And if you fancy something a little more exotic, we can even put our pad thai in your Qashqai. Try Click and Collect at Tesco.com. Every little helps. Selected larger stores. Booking charge may apply. See online for full terms and conditions.
I'm getting strawberry notes and a flutter of sweetness without adding sugar. Clever. It is. Yazoo Kids uses a lactose-reduced milk that enhances flavour without adding sugar or artificial sweeteners. Milky deliciousness and packed full of goodness. Very clever. Strawberry Yazoo Kids supports change for life. Yazoo, shake it up! Contains naturally occurring sugars. Milk is a source of calcium, which is needed for the maintenance of normal bones.
This one shouldn't take long. Of course, if it had a cover, I might not be bothered. Can't see what's under there. And then they'd have chained the back wheel. It would have taken me much longer, especially if the chain's off the ground. Makes it harder to cut. This one doesn't even have a lock on the front. So, in the time I've been talking to you, I've nicked it.
Over 9,000 scooters and motorbikes were stolen in London last year. Lock your bike, chain the rear wheel, and cover it to make it harder to steal. Lock, chain, cover. The Met Police.
Casa Bacardi is back, bringing a party with an unmissable lineup and tasty rum cocktails to London. With Bacardi's new Sound of Rum crew, featuring live sets from One Asen and P Money, MCing from Harry Pinero, and loads more. The perfect recipe for an epic night out. Casa Bacardi at Box Park Croydon on September 14th. For more info and to get your tickets now, head to boxpark.co.uk. Do what moves you. Over 18s only. Drink aware for the facts.
No. No. No.
What are you doing?
I don't like any of our preset radio stations. We need a new car.
With the Jaguar E-Pace at $299 a month on personal contract hire, you'll find a reason.
That's better. And it's a Jaguar.
Initial rental £3,588. 48-month term. Subject to status. 8,000 miles per annum. Excess mileage and return conditions apply. No ownership option. Ends 30th of September. Participating retailers only. Jaguar contract hire.
All right, coming up on the halftime report at noon, it is turning into a big week for the Bulls. We are drilling down on the stocks that may be worth your money right now. Plus, a big call on the airlines. 2 names. One company says you got to buy. We're going to name names. And Fed Chairman Jay Powell is set to speak about the economy and Fed policy. It will be the last time you're going to hear from him until the next Fed meeting. All of that is ahead on the halftime report coming up at noon. And John, what did Trump tweet today? Where's Jerome or something like that? Well, he's going to be on the halftime report.
All right, Brian, thank you. And now let's get to the CME. Rick Santelli's got the Santelli Exchange. Any whips today, Rick?
No whips today. We only do whips every now and again, John. Listen, but what was whippy were some of the data points involved in today's jobs report. Listen, there's a major assumption out there by many economists and analysts, and I'm not sure I subscribe to it, but here's the way it goes, is that we're late cycle, and of course jobs are going to drift lower, and demographics are the big issue with regard to things like labor force participation, employment to population, and that these things can't really do much more. Well, I think the latter isn't correct, so I'm not sure about any of it. Now, granted, jobs have been slowing. I'm not convinced that it is going to take this glide path all the way into a recession, if that occurs in 2020 or not. Let's look at a couple of charts. Labor force participation rate moved up 0.2 to 63.2. As you see on this chart that goes back to January of 2013, that this number is shown up several times, but it is the high water mark going all the way back to the fourth quarter of 2013. The more dramatic chart is employment to population. At 60.9, it is the best since December 2008. That certainly isn't acting late cycle, so I think that assumption has some questions attached to it. Another issue this week, even though jobs were light, corporate issuance was heavy, heavy, heavy. Oh my goodness. There was a 3-day period, 72 hours, where we had investment grade issuance just a whisker below 75 billion. 75 billion, 3-day period, historic. Never had a 3-day period like that. And to think how much September is left. It looks to me like there's another 40 to 60 billion in the pipeline for the month, maybe more. I understand. It's an opportune time, isn't it, with interest rates moving back down to historic lows? But in my mind, it's a demand story. What's really fueling this is easy. It's a big number, 17. 17 trillion of negative debt is making demand just insatiable for some of this positive returning paper. So it's a marriage made in heaven. But there is a bubblicious feel to it, isn't there? Finally, when it comes to rates are up a bit this week, even though they've come well off their best levels, and that occurred after the jobs report. And leading up to it, maybe was the more important story of how they snugged up, really led by Europe. How do we go about interpreting this move this week? Listen, we were due a correction because of the big drops in August. Is this bottoming? Is this bottoming action? I think it's still a little bit too early to tell. Morgan, back to you.
Rick Santelli, thank you. Apple, Deere, Disney, just a couple of the names that sold debt this week. When we return, DocuSign, the big movers, earnings mover, I should say, this morning, it's surging about 18%. The CEO joins us exclusively on the other side of this break. Don't go anywhere.
Old Dominion has ranked #1 in overall performance.
I'm getting strawberry notes and a flutter of sweetness without adding sugar. Clever. It is. Yazoo Kids uses a lactose-reduced milk that enhances flavor without adding sugar or artificial sweeteners. Milky deliciousness and packed full of goodness. Very clever. Strawberry Yazoo Kids supports change for life. Yazoo, shake it up! Contains naturally occurring sugars. Milk is a source of calcium, which is needed for the maintenance of normal bones.
With a welcome bonus from the no annual fee British Airways American Express credit card, your next getaway's not far away. So whether it's welcome to drifting down the canals of Amsterdam or bienvenue to midnight strolls in Paris, say welcome to a European adventure. Spend £1,000 in your first 3 months of card membership and get 5,000 bonus Avios. That's enough to get away to Europe sooner. Search BA Amex to find out more. Representative 22.9% APR variable. Applicants must be 18 years or older, subject to approval. Terms, taxes, fees and carrier charges apply.
With Rapid Insurance on Vodafone Business, we'll get a replacement phone to you within 4 hours. So if you should... Oh, no. Or even... Just get in touch and we'll...
Your replacement phone, sir?
Your phone replaced within 4 hours with our Rapid Insurance. Available on our new and limited data plans. The future is exciting. Ready? Vodafone Business.
Max download upload speeds apply to data. Coverage may vary. Unlimited and rapid terms at vodafone.co.uk/terms.
This one shouldn't take long. Of course, if it had a cover, I might not be bothered. Can't see what's under there. And then they'd have chained the back wheel. It would have taken me much longer, especially if the chain's off the ground. Makes it harder to cut. This one doesn't even have a lock on the front. So, in the time I've been talking to you, I've nicked it.
Over 9,000 scooters and motorbikes were stolen in London last year. Lock your bike, chain the rear wheel, and cover it to make it harder to steal. Lock, chain, cover. The Met Police.
Casa Bacardi is back, bringing a party with an unmissable lineup and tasty rum cocktails to London. With Bacardi's new Sound of Rum crew, featuring live sets from One Asen and P Money, MCing from Harry Pinero, and loads more. The perfect recipe for an epic night out. Casa Bacardi at Box Park Croydon on September 14th. For more info and to get your tickets now, head to boxpark.co.uk. Do what moves you. Over 18s only. Drink aware for the facts.
Take a look at shares of DocuSign, up big this morning, up 18% at this point. Reporting Q2 results, including a beat on revenue, upbeat current quarter guidance. The CEO, Dan Springer, joins us now in a CNBC exclusive. Dan, good to see you.
Good to see you, John.
So this strikes me as a pivotal quarter. A lot of folks on the street obviously didn't see this coming. Earlier this year, you announced the Agreement Cloud. There's a lot of like branded clouds out there now, experience clouds, marketing clouds. The Agreement Cloud. Explain to investors exactly what this is, how it's different from the regular kind of digital signing market that you've been in and where you're taking it.
Absolutely, John. We're super excited about the DocuSign Agreement Cloud, as you indicated. We realize that our customers have said e-signature is a fantastic foundation for their business, but they have a broader set of needs around the way they not only sign agreements, but the way they prepare them and the way they manage them after they've been signed. So we've built out a broader suite of products, and that's what we're bringing to market today.
This is similar, strikes me as similar to what we heard from Slack just a day ago, and how they're using certain channels to allow people, not just within an organization, to collaborate, but outside of organizations. How do you expect this move for more intercompany collaboration to affect this cloud era?
Well, I think it's key. The connectedness you're talking about that Slack's sort of seeing and pushing for is very similar to what we see as well. Companies want to be, in our terminology, more agreeable. So those are the communications they want to have within their companies or their back office functions that they've tried to digitally transform, but also for the front office. You know, they really want to have a customer experience that is what the customers expect, that they'll be easy to do business with. And we see that the Slack moves are very similar to what we're seeing in the Agreement Cloud.
Dan, it's amazing to me how much e-signature is still a largely untapped market. Where you see the greatest opportunities when it comes to industries, sectors right now, the most adoption that hasn't taken place yet?
Yeah, so I think we're super excited about the core e-signature business, and why we talk about the Agreement Cloud is we think that's the broader opportunity to really make this one of the most significant cloud opportunities. But we don't in any way want to move away from the excitement we have over the core signature business. It's sort of what brought us to the dance, right? And if you think about the roughly $1 billion of revenue that we will deliver this year, the bulk of it will still come from e-signature. The growth opportunities are very broad. We like to talk about the fact that DocuSign is unusual. We serve from the smallest business to the largest enterprise, and across all verticals. We are excited to talk about federal. We had our first $1 million ACV deal that we just announced in the quarter. And so it's not just that segment. It really is very broad. We think financial services will continue to be a driver for us. As I mentioned, federal will be excited. I think you're going to see us continue to expand internationally, domestically. It really is a broad-based opportunity.
I'm curious about what the competitive landscape looks like, Dan. Who are your main competitors, and how are you staying ahead of them on innovation and things like discount pricing?
Well, if you think about the overall TAM, e-signature, we've talked about a $25 billion market. And as you think about the broader Agreement Cloud, we think that gets into a magnitude of many billions more, maybe doubling the overall opportunity. And when you think about the competitive set, it's so early, right? We're only about, we think of it in a 4 or 5% penetrated in the core signature business and less on the broader one. So when we actually talk about competition, we talk about paper and manual processes. But this business is so early days. We're in the early innings, and we believe that our biggest competition really is paper and manual processes. And as we like to say, it's a great competitive set to have because they don't fight back very hard. It's just a matter of time before we're really going to be able to replace and modernize those systems.
Yeah, a lot of people thought that Adobe had the digital document, that whole stream all tied up. Clearly, that's not the case. I wonder, from the mega-scale cloud platform perspective, whether you're talking Amazon, Microsoft, Google, is any one of them better tuning their platforms for the market that you're trying to grow, or are they all the same?
Well, I think when you think about the infrastructure side, it's a huge part of where the cloud is going, and we've been much more focused on the application and thinking about that end user value. But on the infrastructure side, I think it's a hugely competitive space, and it used to be looking like a two-horse race. You know, we don't think about Microsoft and Amazon, but now looking at some of the other players, what Google's doing, I think you're going to see more and more competition in that space. But I don't think it's going to be necessarily bad for those players because it's a really large expanding market. On the application side, we think this kind of new cloud opportunity that we see in Agreement Cloud is going to be the next big cloud, because we think, going back to your connectivity point, John, This is about bringing multiple clouds together. So we work strongly with ERP, strongly with CRM. We're actually finding opportunities increasingly every day to make the other cloud investments that people are making more valuable for them by bringing them together and what connects them, which is the agreements those companies do.
Now, head to FOREX.
All right. Well, a big day for DocuSign's stock, up 18% after earnings. Dan Springer, CEO, thanks for joining us. Squawk Alley's back in less than 3.
I found a way to relieve my constipation that's both...
I'm getting strawberry notes and a flutter of sweetness without adding sugar. Clever. It is. Yazoo Kids uses a lactose-reduced milk that enhances flavour without adding sugar or artificial sweeteners. Milky deliciousness and packed full of goodness. Very clever. Strawberry Yazoo Kids supports change for life. Yazoo, shake it up! Contains naturally occurring sugars. Milk is a source of calcium, which is needed for the maintenance of normal bones.
This one shouldn't take long. Of course, if it had a cover, I might not be bothered. Can't see what's under there. And they'd have chained the back wheel. It would have taken me much longer, especially if the chain's off the ground. Makes it harder to cut. This one doesn't even have a lock on the front. So, in the time I've been talking to you, I've nicked it.
Over 9,000 scooters and motorbikes were stolen in London last year. Lock your bike, chain the rear wheel, and cover it to make it harder to steal. Lock, chain, cover. The Met Police.
Casa Bacardi is back, bringing a party with an unmissable lineup and tasty rum cocktails to London. With Bacardi's new Sound of Rum crew, featuring live sets from One Asen and P Money, MCing from Harry Pinero, and loads more. The perfect recipe for an epic night out. Casa Bacardi at Box Park Croydon on September 14th. For more info and to get your tickets now, head to boxpark.co.uk. Do what moves you. Over 18s only. Drink aware for the facts.
Did you know Currys PC World do business? Saving your business up to 30% with mega deals on computers and printers, electricals, large screen TVs, and even more. Top brands like HP, Microsoft, Epson, Sony. And if you find it cheaper from any major retailer, we'll match it. Get these deals before they're gone. Must end soon. Visit your nearest store or pcworldbusiness.co.uk/megadeals. T's and C's apply. Excludes Inc. and third-party sellers. Visit website for price promise details. Claim within 7 days.
No. No. No.
What are you doing?
I don't like any of our preset radio stations. We need a new car.
With the Jaguar E-Pace at $299 a month on personal contract hire, you'll find a reason.
That's better. And it's a Jaguar.
Initial rental £3,588. 48-month term. Subject to status. 8,000 miles per annum. Excess mileage and return conditions apply. No ownership option. Ends 30th of September. Participating retailers only. Jaguar contract hire.
See you guys later for Closing Bell. We are set to wrap up what looks like a very strong week in the markets. The rally continuing today after that mixed jobs report, up 1.8% for the S&P so far this week. And we're going to be there to react to Jay Powell, who is speaking at the SMB in Switzerland. We'll see what he says about the U.S. economy and the outlook for rates.
Do his friends call him Jerome now?
Jerome. That was the subject of the Trump tweet, right?
Yeah,
Brennan, did I get this guy,
friendly.
Jerome?
Well, that'll do
Better
it for
than
us
enemy.
here. Yes, on Squawk Alley. Let's send it to Brian Sullivan on the half.
All right, John, Sarah Morgan, thank you all very much. And welcome to a Friday halftime report. I am Brian, in for Scott once again. Job growth, it does fall a bit, but stocks, they don't care. Shaking it off. Markets coming off a big week this week, and get ready, because Fed Chair Jay Powell set to speak again. It is 12 noon, and this is the halftime report.
Jay Powell getting ready to speak this hour about the economy and Fed policy. His last speech before the next Fed meeting. What happens if investors don't like what they hear? The big week for the bulls. Tech up 2%. Transport's up more than that. The semis soaring. The stocks to snap up right now. Time to take off. Why investors should check into Delta and American Airlines. It's our call of the day. The investment committee is ready to go. Halftime report starts right now.
And it certainly is good to have you with us on this Friday. Our investment committee today is Joe Terranova, Stephen Weiss, Jim Lebenthal, and John Nigerian, and Megan Shute, Senior Investment Strategist at Wilmington Trust as well, added to the panel. Megan, good to see you. Thanks for coming in.
Thank you.
All right, we begin this big week for the markets. All 11 sectors. That's all. That's 100%. They're in the green for the week. 4 of them, including technology, are up about 2%. The transports and some of the chip names, guys, are also soaring and doing very, very well. Joe Terranova, we talked about it a little bit yesterday. Are you surprised by how strong this market has been this week? Where did this come from after an August to forget?
I wouldn't categorize it as an incredibly strong market. I think it's a market that finally has broken out of a consolidation range when you're talking about equities. So post President Trump's August 1st tweet, we basically stayed between 28.25 and 29.45. We have finally broken out above that. The question becomes, do you think it is durable? You're approaching the Federal Reserve on September 17th and 18th. They're going to give you your 25 basis points. What does the market do with that? So I would argue the path of least resistance at this point, believe it or not, is probably higher. But I wouldn't lose those other components of your portfolio that have allowed you to endure the equity volatility, like REITs, like investment grade, like high yield, like precious metals. I think they're all going to be an important component down the stretch.
You know, John Nigerian, I got a note here from Nomura. Okay, they're quant. Now, it is their quant team, so they're maybe sort of talking what they know. And they're saying that speculative trades and other investors entered into pessimistic trades in October. They're reversing course. In other words, what Nomura seems to think is that so many on the algo or the trading side, actual traders, not investors, traders, had just barreled into pessimistic trades in August.
True.
That they have to reverse it now. That's what we're seeing, but it probably can't last for long.
I would disagree. And I think we last up until at least when the Fed makes its next report.
Well, they agree with that. They see it through September 16th through the 23rd. They're oddly specific.
Yeah. I wonder what happens during that time frame, folks.
The Fed, by the way, is the 18th.
There you go. Right smack in the middle. I think what we heard today from the BLS, the Bureau of Labor Statistics, was all good news, Brian, for the way I view how this news should affect the markets. They brought in, as Larry Kudlow said, like 571,000 more folks into the labor force that had been on the sidelines. Seeing that coming in, that's a big positive. They would be coming in, of course, because they think that there's opportunity to make money working rather than not being in the labor force.
Megan, I got to imagine your phones were blowing up in August, right? Little chaotic time. You're like, hey, I'm just trying to take a vacation. Leave me alone. But you can't do that for your clients. What are they saying now? What's the main message? What's the thing that they're worried about when they call Wilmington Trust?
Well, I think it's really hard to not be paying attention to the trade headlines, but that's actually what we're advising our clients to do, is take a step back and not get swung around by every single trade headline. Through August, a lot happened, and at the same time, it feels like we're basically right back where we started. So we have some news of trade talks happening in October, which I think is a good thing considering the escalation in tariffs, and I'm sure that's what we're seeing in the market today. But at the end of the day, we're still, in our view, miles apart on a deal between the U.S. and China, and we still have this bifurcated economy where the manufacturing continues its downward trajectory, and services is holding up, but not, and the consumer as well, but not totally immune to it. And we're starting to see some cracks. I would say the labor market report today was a disappointment in our view. Maybe good for the market because it gives Powell cover. Exactly. Exactly. Well, it's kind of right in between there, so you get the cut.
What was the disappointment in your view?
The payroll growth, and if you look at year-over-year payroll growth, it's very disappointing. It's been just basically on a downward trajectory.
In terms of number of people going back to work?
Number of jobs created. Jobs created has been disappointing, and part of that, we missed expectations, consensus expectations today, and part of that was this one-time boost from the census, which is about 25,000. So not a bad thing by any means, but soft, definitely.
I know, but Stephen Weiss, and you kind of dug in a little bit. I think Steve Leisman's around here, so I'm going to keep this quiet because he might be right over my shoulder. I don't want him to throw anything at me. Which is, I do wonder though, and I was kind of tweeting about this morning, is the jobs number really that relevant? Only in a sense that everybody's working, right? You can't grow jobs. There's 7.5 million open jobs in this country. How do we expect the number to grow when everybody? You live in New Jersey. I'm sure you see, like I do, help wanted signs everywhere, and yet you can't fill a job.
I'm not looking like you.
Is it? No, I'm still. Well, you never know with this kind of talent. I'll probably be somewhere else soon. So here's the thing: does it matter as much as it used to?
Absolutely not. And that's why I asked the question. I thought there were positive things to come out of the jobs report, but I don't think it changed your position if you were bearish or if you were bullish. If you thought the Fed should go 25 or 50, really didn't change your view on that.